Hey everyone, Coach Investor back to another video for today. So let's talk about 9 Warren Buffett lessons that every investor should know going into 2022. Those are lessons that are very important for long-term investors, but also very crucial for those new investors that joined the stock market game back in 2020 or maybe even 2021. So if that's something you'd like to hear, sit back and relax. I would also like to thank everyone that has been subscribing lately. The support has been incredible. We're on the way to 20,000 subscribers. So it would really mean a lot if we could end this year hitting that mark. So if you haven't subscribed to this channel, maybe hit that subscribe button and hit that thumbs up button, as it really helps me outgrow the channel and get my videos out there. So let's start with lesson number 1, which is control your emotions. Invest with your head and a bit less with your emotions. Saying that last year was a great year, so next year will be another great year is a big mistake. Goes on the other side as well. This year has been a terrible year, so next year is also going to be terrible. That's not how it works. So again, control your emotions, invest with your head. Pretty simple, right? And that's why it's the first one we're going to cover. Number 2, seize all opportunities. Mistake of omission and not commission. If you are 100% that company XYZ is going to be a success, just go for it. Invest. Because if it turns out that you were right and you did not invest in that company, you will regret it and probably make lots of investing mistakes after it because you want to catch what you just lost. So if you've done your research, if you've done your due diligence, and you're 100% sure that this company is the right one for your portfolio, is going to be a very successful company, just go for it. Don't just wait, oh, the price is at 200, I'm going to wait until the price goes to 190. What's the difference, right? It's $10 if you plan on holding it for 10 or plus years. This $10 will not make any difference. So if you've done your research, if you know you're right, if you know the business is correct and a great one, just go for it. Or
just do it!
Next we have the don't be cheap, be fair. Buy a wonderful business at a fair price rather than a fair business at a wonderful price. Obviously, with growth stocks, this is maybe less relevant, even though fair price, fair business is a bit subjective. But if you go through the value investing route, then this is very important. But even actually with growth stocks as well, because fair, like I said, is a bit subjective, but you can still compare to its competitors. Let's say one is trading at 50 times sales, but only growing 20% year over year. The other is trading at 30 times sales, but growing 60% year over year. So you see here the big difference. And on the flip side, just because a business looks cheap does not mean that it's a wonderful business. It may look cheap for a very good, maybe bad reason. Maybe the business is deteriorating, maybe growth is slowing down or maybe non-existent anymore, and that's why it's cheap. So don't just look at the cheapness of the business, look at how solid the business is. And now one of my favorite lessons of all time. Be greedy when others are fearful and be fearful when others are greedy. Let's take an example of recent weeks and also earlier this year. In recent weeks, you've probably seen a lot of articles that we're going into a recession, we're going to crash, this and that, sell everything. Actually, in recent weeks is not really the time to sell everything, because if you actually look at the graph, if you look at all those growth stocks, not the index, because the index has been hitting all-time highs for the last couple of months. But if you look at all the growth stocks, they've actually been in a bear market since the highs in February. Most of them are probably down year to date, 40, 30, 50% or so. So right now is the time maybe to be greedy when others are fearful. Back when everybody was throwing around weird numbers was maybe the time to be fearful and not greedy. Every year I do a video on this channel, which is going to be next week actually, where I talked about my investing mistakes I did during the year and the good moves I did. So this video will come out next week. I did one last year. If you want to check that out, it's going to be in the top right corner. But again, be greedy when others are fearful and be fearful when others are greedy. Take this opportunity to maybe do some reallocation with your portfolio. Take this opportunity to maybe add to your very strong conviction stocks. And then over the long term, trust me, it's going to work out very well. Now, if you do not know how to pick out long-term winners, I have maybe something to offer. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, we're halfway there, which goes into the next lesson, which is also a very important one. Don't just understand the product, but understand the underlying economics of the business as well. It's great if you know what the company does, the product works, etc. That's great. But a good product does not mean that the economics of the business translate into a great one, right? You can have a great product, but then they're making losses and losses and losses, and the business is just not investable. Can happen, right? So just know what you're investing in, know the economics of the business, know the product of the business. Trust me, knowing the product very well is already a very, very good step, because some people just don't even know what the product is or what it does. Next up is very, very simple. Long-term investing, not much to add, right? If you have a long-term view, you probably already have a big advantage over someone that has a short-term view in investing. If nothing changes fundamentally in a negative way, there's really no reason to sell. Saying that it's too high, the price is too high, is not really a solid reason to sell. Only buy something that you would be willing to hold if the market shuts down for 10 years. So, long-term investing, long-term gains. Warren Buffett himself made most of his fortune only after he turned 50 years old. So, didn't happen overnight, took some time. Now we're almost at the end here, and this is a very, very simple, yet very, very crucial lesson. Rule number 1 in investing is don't lose money. Rule number 2, never forget rule number 1. And I'll add a semi-rule here. Risk comes from not knowing what you own. A lot of people talk about, oh, you're investing in risky stocks, you're investing in risky businesses. Actually, no, I know exactly where I'm invested in, so I already take that part of the risk off the table. If you invest in stuff you don't know, if you invest in businesses that you have no clue what they're doing, the risk is real and the risk is there, because when everything goes up, then fine. You don't really ask questions because you're making money. But when everything goes down, you start asking questions. And if you're starting to ask questions that don't make sense, especially if you get answers that you have no clue what that means, then yes, you had already much more risk on your holdings, on your portfolio than you should have. So risk, the word risk has really, really different definitions here. And now the last two ones are very, very focused on the long-term investing thesis. So one is time is the friend of the wonderful company, the enemy of the mediocre. If you aren't thinking about owning a stock for at least 10 years, don't even think about owning it for 10 minutes. And I'm going to explain what he meant by the first sentence. Time is the friend of the wonderful company and the enemy of the mediocre one. In the short term, a wonderful company, the stock price of a wonderful company can go down. In the long term, if it's a wonderful company, it will most likely go up. On the flip side, a mediocre company, in the short term, the price can go up. For example, Nikola, the price has gone up. But in the long term, it will go down because, well, the market, people will realize, well, it's a crappy business, so it will have to go down. And this is extremely, extremely important for all those new investors that have a short-term view, because 2020 was so rewarding, let's say, 2021, not so much. If you're down, let's say this year only, this is short-term. This is actually very, very short-term, because like this lesson says, in the short term, yes, the price might get punished. But in the long term, if you are truly invested in a great company, you will be rewarded, and quite nicely actually. And our last lesson, and the most important one here, and that's the stock market is designed to transfer money from the active to the patient. Like I said, the old man didn't become one of the richest investors of all times overnight. It took some time. And again, patience here and a long-term view goes a long way. Trust me, if you already have a long-term view, if you are the type of investor that is pretty patient with their investment, you're already doing much, much, much better than the average investor. There's a reason why they say that most people don't beat or can't beat the index. Because most people don't have a long-term view, most people can't stomach the volatility, and most people aren't that patient. If you do have all those qualities, you probably will do very, very well in the long term. So that will be it for this video. Hopefully you like those types of videos. If you want to hear more lessons about more great investors, let me know which one down in the comments below. I can already tell you that the next one will be about one of my favorite ones, which is Peter Lynch. So if you're interested in that, just hit that subscribe button. And if you like these videos, hit that thumbs up button as well. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.